deterioration in China tech companies. Alan Nuckman joins us, Chief Market Strategist at St. Paul Research. Alan, so I mean, this is just an unrelenting beatdown here for everything in China. But one of the companies that you're looking at, WEIBO, has managed to try and sneak through some of this.
Yeah, it's had some great performance. We did well in it just a couple weeks ago, and it's come back to its breakout point. So as a trader, this is exactly what you want to see. So we're 10% off the recent highs. Let's talk about the American market first. So a record week. We had a huge comeback after that profit-taking pullback last Monday, new highs, and oil actually finished positive. So all of our barometers are set up. You've got the 10-year yield down at 1.25%. Earnings are plus, plus, plus. So everything's set up. Now, there are some stocks and sectors that haven't participated. Like you said, China is something that I'm looking for to see some rotation into some value. And WB has been trading between 45 and 65 now since March, and it's come back to that 55 midpoint that I can lean on. So,
Alan, this one I think is interesting. The first part of this trade doing okay, but everything else around it falling apart. How risky is that? Are you stepping into? Are you trying to step over minefields here? Or you're wading through an area of the market that is like the worst right now?
Not at all. Let's remember what we did again just a couple weeks ago in this stock. We had an August option.
Yep.
It blew up. We sold into strength. Now we're buying into a dip. Now, again, these are limited risk plays. I'm buying an August option. The play here I'm looking at is the August 55 call. It's in the money. We're leaning on a level of support. This is a stock that has held pretty well in comparison. Like I said, it just made highs just 2 weeks ago at 65, and now it's 10% off. So this is a stock that was, what are we looking at here? I think 80 or so back in 2018. The breakout of this range between 45 and 65, technically, again, without thinking, just looking at the math, is 85. So there's upside on it here. We have limited risk. And what I'm seeing is some smart money piling in this stock once again after it had that big push and now a pullback.
Okay. So this pullback, Alan, is your view looking at a very stock specific, that it's already disconnected from big tech. China doesn't need to reconnect as that other stuff is getting dragged.
Right, exactly. But I'm still a believer in China in the long run. Again, if you look at a 5-year chart on China versus the S&P, it's almost an exact correlation, exact same patterns until last March, it disconnected. So let's see if they can reconnect. And again, I'm about value, and I like stocks that are beaten down. I like sectors that haven't participated because your risk reward is that much better. So I'm leaning on this 55 level, and again, that's the midpoint here. And if, as a trader, if that fails, then this position is probably not going to be successful. But it's a very strong technical point to lean on and to buy at, and that's what we're looking forward to do, is make a recovery once again.
All right. Okay. Alan, still dabbling in the China markets here despite the blow up. Well, there's no good big tech here to trade, Alan? Or is everything too expensive now in the NASDAQ for you?
There's plenty, but it's got earnings. I've got Apple earnings. I got AMD earnings. I got everything on my plate that I love, and I don't want to step into something just in case there's a surprise. So I've got to be patient this week with a lot of my big tech plays. I got to wait for this to flow through. We'll talk next week.
So you're waiting to see how earnings go. You're not going to dabble in any of the big names getting ready to report. No Tesla, no AMD. You're not going that route.
That's just, I'm an old trader. That's a gamble. You never know what they could say. Even if you knew what the earnings were, you don't know how the markets are going to react. So let's let that process through. We had made some money in Apple on the, upskill here. But now it's just kind of it's a danger game if you're just going to play in earnings, because you never know what's going to be said or done.
All right, for a guy who's usually pretty ready to pull the bullish trigger on upside for tech, Alan, seems like you're a little wary about this earnings season.
I am not weary, but you want to get out while the getting's good, just in case. Remember what happened to Apple last time? They had all-time,
well, there you go,
incredible numbers, and that was the peak. That was the highest it ever hit till recently.
Right. Yeah, it was a good 2-month-long top put in there. All right. So not wary, you won't use that word, but you are still calling back to last earnings season. So it's on the mind. All right. Appreciate it, Alan. Thank you, sir. Thank you. Mr. Nuckman's the Chief Market Strategist at St. Paul Research. looking to dabble in WEIBO as one of the outperforming China stocks and taking a little breather in between the earnings. Let's get back to the housing story when we come back. Should we be concerned about the new home sales print that went the wrong direction? This has been really the lifeline of our economic rebound.